Okay, for this video, I want to cover what are non-recaptured Section 1231 losses and how these are reported on your tax return and how it impacts 1231 reporting and gains in subsequent years. So I've got a couple slides in front of us, 2 slides with some information on 1231 gains and losses and the non-recapture piece. And then I've also got some sample tax returns here. So we've got a 2020 return and a 2021 return for our same taxpayer here, John Q. Taxpayer. Now the reason why I have 2 years of returns, because what we're going to do here is we're going to show how in 2020 you can have a 1231 loss, which is ordinary, but that creates this non-recaptured 1231 loss that comes into play in the subsequent year. Okay, so let's start with this slide, go through the rules, and then we'll get into our fact pattern and then the returns themselves. So 1231 gains and losses, right? If you have property that's used in a trade or business and you hold it for more than 1 year and sell it, you can potentially qualify for 1231 treatment on the disposition of that asset. Now, the reason why 1231 is important is because it basically helps the taxpayer out. You get the best of both worlds, right? So if we look at the code sections here, 1231A1 provides that if you have a 1231 gain, right, so if gains exceed losses for the year, net gain, the net gain is going to be treated as long-term capital gains, right? And that's a good thing because long-term capital gains tax rates are lower generally than the ordinary rates. 1231A2 states that if we have losses in excess of gains, so if we have a net loss here, the net losses shall not be treated as gains from the sale of capital assets. So in other words, we're going to get a net loss that's treated as an ordinary loss, right? And that's also good because ordinary losses can be offset against other ordinary income. They're not subject to the same types of capital loss limitations if we had a capital loss on the sale of that asset. So again, this is the best of both worlds for the taxpayer. Now here's the catch. When you have 1231 losses, you have to be cognizant of these non-recaptured 1231 loss provisions. So if we look at 1231C1 here, it states that the gain for the year shall be treated as ordinary gain to the extent such gain does not exceed non-recaptured net 1231 losses. So what does this mean in layman's terms here? So if you have 1231 gains in a following year, you first have to treat the amount of that gain as ordinary to the extent you have non-recaptured 1231 losses from any prior periods. So there's a 5-year look back. And then any kind of excess gain over that, you can go back to the long-term capital gain treatment. All right, so let's look at our example here, and then we'll also jump into the returns, and I think it'll make it much more clear when we actually see the numbers on paper. So for the 2020 tax year, so first I want to go through the whole fact pattern, and then we'll look at the return. So for 2020, we have John Taxpayer here. He owns a rental property, which he bought in 2018, and he sold it in 2020. So he has a greater than 1 year holding period. He sells the property at a loss, right? So the sale price was less than his adjusted basis, so he sold it at a loss of $8,179. And he's going to get the 1231 ordinary loss treatment, right? So this is property used in a trade or business, held for more than a year. It's Section 1250 property, which is realty. So he's going to get the 1231 ordinary loss treatment. Then in the same year, right, so on February 1st, 2020, John purchases a second rental property and immediately starts renting it out. So on John's 2020 tax return, he gets his ordinary loss up here of $8,179. But he doesn't just forget it completely, right? So he takes the loss, but he also has to track his non-recaptured 1231 loss carry forward, and it's for the same amount, $8,179, okay? And I'll show you where all these numbers would end up on the return when we get to the actual forms. So now we jump forward to the next year. So what happens in 2021? On November 15th, 2021, John sells that second property, right? So the property he purchased up here on Feb 1, he sold it in November 2021, and he made a gain on it, a nice large gain, $44,092. Now the holding period for the sale of that property is greater than a year, right? So it's long term, and he used it in connection with a trade or business, so he's going to get to benefit from the Section 1231 treatment. Now on John's 2021 return, he's got to report the non-recaptured 1231 loss carryforward. This number is reported on the form 4797, specifically line 8. And now of that $44,092 gain, it's first reported in Part 3, and we'll look at how that's done. So consistent with how you would report any kind of gain from a 1245 or 1250 property if it was held longer than a year. But now he can't just treat the whole thing as long-term capital gain. Okay, he's got to bifurcate it into the 1231 non-recaptured carry-forward amount, which is going to be ordinary, and then the excess is going to just revert back to that long-term capital gain amount. So $8,179 is going to be treated as ordinary, and then the remainder is going to be the $35,913. All right, so let's look at the forms here and see how all this flows through. So we'll start with 2020. So this is John's 1040. He's a single filer. He's got some wages up here and then no other investment income apart from the rental property. So if we jump down to, well, Schedule E, we can just highlight this for a bit here. So we've got the two properties, right? So remember, he had one property that he owned since 2018 that he rented, and he bought a second one in 2020 that he started renting. So that's why we've got the two properties here, the rental income and expenses. Nothing too odd there. Now here's where we get to the sale. So the 4797, we were reporting the sale of that property, that first property, in Part 1, right? Because it's property used in a trade or business. It's held for more than a year. And it's sold at a loss. Remember, if you sell the property held for more than 1 year at a gain, you first start in Part 3. So you report that sale in Part 3, but because this is a loss, we're reporting it here in Part 1, Section 2. So we've got the date acquired, the date sold, the sale price, he sold it for $185. The initial cost basis plus expenses of sale was $205, and then that's the amount of depreciation that was taken over the years. So when you net all those together, his gain or loss on this disposition is that loss of $8,179. Okay, so the $8,179 is reported on Schedule 1, right, Part 1, Line 4. So that's where we report the ordinary, sorry, let me go back, there it is. So Schedule 1, Part 1, Line 4, there's our other gain or loss. This is an ordinary loss. Remember, this is a 1231 loss, right? So property used in a trade or business, held for more than 1 year. He gets the ordinary loss treatment. So there's the $8,179 versus, if it was a capital loss, we'd be reporting it on Schedule D, right? So now that he's taken that loss and it's being applied against his other income, this is where he has to create a roll forward schedule. Now this is just kept internally. You can see that our up here, the tax software we use does a nice little schedule here, and it highlights that you're keeping this for your records, right? So the IRS doesn't necessarily want to see this, but you have to track it. So we have our non-recaptured 1231 loss carryover worksheet. In 2020, we have that amount there, $8,179, and so it's being carried over to the 2021 tax year. Okay, so now that that's all said and done, let's look at the 2021 return and see how this comes into play. So here's John's 2021 return. If we go down to Schedule E here, we can see that, bear with me. Okay, so Schedule E, we can see that we just have the one property, right? Because remember, he sold that first one. So now he's only got one property in 2021. He did rent it out during the year up until the date of sale. So he's got some rental income and expenses there. And here on the 4797, we're reporting the disposition of that property. So Part 1, remember, we used this last year because we took a loss. But when you have property used in a trade or business held for more than a year and you sell it at a gain, you start with Part 3. So Part 3 on page 2 of the 4797, we have gain from the sale of 1245, 1250 property, and so on. This is Section 1250 property because it's real estate. So here's the description of our real estate, the date acquired, date sold, and then in the property aid column, we enter information on the sale. So John sold the property for $355,000. His initial cost plus expenses of sale was $330. The amount of depreciation he took over the course of the holding period of the property when it was placed in service as a rental property, $19,092. So his adjusted basis is the 310 number. So the total gain here is gross sale price over the adjusted basis, $44,092. Now that number flows up here to line 6, right? So we have our gain from line 32, 44,092. Now, if John didn't have any 1231 non-recaptured carryovers, effectively this whole amount would just be reported as long-term capital gains on Schedule D. But he does have some non-recaptured 1231 losses from prior years. There's that number, right? So line 8, we were reporting the total amount of non-recaptured 1231 losses from prior years that is being rolled forward. So we have our $8,179 amount. And so the net long-term capital gain now is $35,913. The ordinary portion is then reported here on line 12. And so line 18B highlights how this is going to be entered on Schedule 1, Part 1, line 4. So notice that the amount of gain in total is still the same, right? So it's $44,092. That's the amount of gain. But what we have to do here, because we're recapturing the 1231 losses, is separate this into, okay, well, what's going to be long-term and what's going to be ordinary. So we've got our long-term piece, 3519, 913, and then the 8179. So on Schedule D, we're going to report on line 11, right? So this is Schedule D here. Capital gains and losses. The amount flowing from 4797 is reported on line 11. This is our long-term capital gain amount. And then on Schedule 1, we report the ordinary piece. So Schedule 1, additional income adjustments. We have line 4, other gains or losses, which are ordinary, from 4797, $8,179. Okay, and then, you know, just for completeness, we recommend that you still have the 1231 non-recaptured worksheet, but you illustrate here that, okay, we had a 2020 non-recaptured net 1231 loss of $8,179. And the amount that was used in 2021, so this current period, the same amount, $8,179, so we recaptured the whole amount. And the remaining carryover that's going to roll into 2022 is 0. Okay? Okay, so I think that covers it for this tutorial. I hope that was helpful. Obviously, if you have any questions, feel free to leave a comment below. Happy to answer any I can. And I look forward to seeing you again on the next video. Thanks so much.